Hello, everybody, and welcome to today's episode of my Trade the Chain show. It's we got to think of a name for it or something. I think because Nick does the dailies now on the Trade the Chain YouTube, but we'll be creative on something. As the title suggests, today we are here to discuss the economy, what's happening. We're about I don't know 6 weeks into it now. And I'm joined here by both our director of research, Nick Mancini from Trade the Chain, and my very good friend, Mark Lepresti, who's frequently on CNBC and Fox News as a contributor and talking all things about economy and market. He's also a very accomplished investor on the VC side. Him and John Najarian have a firm, and they deal with a lot of stuff across all different sectors. So I'm always inspired when I hang out with him. I always get more educated when I hang out with him. And at the same time, I drink too much when I hang out with him. So, Mark, thank you very much for joining us, sir.
I'm only going to screw it up from here, Alex. So I think with that introduction, we cannot possibly go wrong. But thanks for having me, and Nick, it's great to see you.
Likewise.
A few things before I get started. One, I just want to say anything we say, Trade the Chain or our guests, it's not financial advice. We're here merely to entertain you as much as we can, and please construe it as such. Also, I do want to let people know in Twitter who are Voyager fans. This popped in the mail for me. So these cards are going out, and everybody is super excited about them. So if you don't have your purple card yet, I am sure Steve will have it out to you shortly. Another thing I want to bring up is, let's see here. This. So San Juan Smokehouse. Mark, you missed this last night. This place is great. We had a crypto meetup. John was there. I won't bring up any images of John this morning at CNBC at 6 a.m., but you could tell it was a good time from his face. And here's a few pictures, action shots right there. So if you're ever in Puerto Rico, you got to go. Steven there in the pictures, the owner, San Juan Smokehouse. Taste the smoke. It's awesome. So that's all my plugs for today. Mark, well, actually, let's start off with you, Nick. Let's talk about what's happened in the crypto markets and what you discussed on the Daily Show over the last week, what's happening today. There was a little turmoil this morning and what we're seeing. And then we're going to pop over to the economy with Mark and get a macro overlook of what's happening and what can be done.
Yeah, so thank you for that transition. And I am very jealous that I was not enjoying steak and wine with all of you down in Puerto Rico. Hopefully that'll happen soon now that the little summer vacation action is starting. But in relation to the markets, we had some interesting things come in today. So I think primarily what may be the cause of what I discuss next is an issue with the ETH beacon chain. The ETH beacon chain had a hiccup, to put it lightly, this morning very early, and I believe 7 blocks. There was an issue that has not been apparent on Ethereum since it more or less its inception. So the fact that the beacon chain is having a few issues is bearish for ETH and created a massive drag on the crypto market. Now, what was interesting, and Alex, if you can pull that chart back up, is although what you are seeing is SPY data on the chart in orange, Bitcoin is overlaid on top of it. And these are the short-term 5-minute candles to give you a much better idea of the correlation. But you can see that SPY was sitting at the top of its range, readying for breakout, and did. And we had a massive amount of longs at this level. People were very bullish, thinking that the one-to-one SPY and Bitcoin correlation was going to continue. Now, the interesting thing that happened and was coincidentally timed exactly with this ETH hiccup is the fact that when the market opened, Bitcoin dropped a solid 5-6%, and ETH was nearly 10% in the red right at the market open. And we always tell the Trade the Chain community, if you're unsure, wait for the market open to happen, because that's when you will get the most volatility and maybe the best setup, depending on what the opposing trade is. Depending on how the market makers are feeling. So today we had an immediate break in the one-to-one correlation, creating an inverse relationship only 20 minutes. And that is the craziest thing about this morning is we're still piecing together why, but we know what happened. And we know that we are now back to a near one-to-one correlation, as we can see from the orange line and the S&P candles. Now, this is probably going to be one of the heaviest talked about topics in the crypto market, I would assume, at least over the next 24 to 48 hours. But definitely a closer look will have to be taken in regard to this correlation, because Alex and I have been talking about this for quite some time. And we even mentioned, it seems it's getting a little too easy. You know, if you're just looking at SPY or SPX to see what Bitcoin is doing, that's too easy. Market makers are going to take advantage of that sooner rather than later. And clearly they did today. So we're back to correlated, but we do know that in let's call them decision-making times, very, very important focal points in the market for Bitcoin. We can no longer rely on the correlation with equity markets to be our canary in the coal mine. And interestingly enough, something worth mentioning, high-risk L1s have been leading Bitcoin in terms of general price movements. We've seen AVAX and SOL and even ETH lead Bitcoin lower recently, but also higher in the past when we've seen bounces and things like that as well. So the theory that I'm kind of baking is that high risk markets may be leading low to mid risk markets, at least in the short term. And it's something to definitely look out for, considering that ETH was clearly a drag on Bitcoin and the correlation went inverse at a high focal point. So something to look out for in terms of how the market makers are thinking and pushing liquidity around.
Yeah, and thank you for that, because this morning that dip was a little scary, and it's always good to have your insight into what's actually going on. Mark, over to you. I want to talk about this.
Oh, no.
I mean, I don't know who took that picture. She looks unhappy, and you look like you're going to see a theater show. So this is from a week ago. This is with Maria Bartiromo, and what was being discussed was the economy, and you had some really good insights. That's why I had to call you up, because there was a lot of enthusiasm in what you had to say, and I'd love for you to kind of re-go over that with everybody here.
First, I'm glad I finally have confirmation that somebody watches my spots on TV besides my girlfriend and my mom. Not that I don't appreciate their viewership, but I need a little more than that to get the ratings going. And yeah, that was a terrific spot with Maria. I actually, she got me my start. So long time ago, actually, Maria and I were both working on the floor of the New York Stock Exchange together on my very first day on Wall Street. She was the only woman working on the floor of the exchange then. We reconnected at the Columbus Foundation, which is an Italian-American club here in New York City that runs the Columbus Day Parade and a lot of Italian cultural events here. And she kind of said, hey, you should be on TV. It was very early on in my career. She got me the very first segment. I think I did one of the graveyard shift shows on CNBC from 30 Rock, that they sort of make sure that, you have a face for TV and not for radio, and that you don't drool and you can, complete a sentence, and practice my non-regional diction, even though I'm from Brooklyn. So that took a little bit of time to shake off. But yeah, she got me my start. Then she, of course, went to Fox. And then I went on to do Closing Bell with Bill Griffith and Kelly Evans, which I loved doing for a long time. So this was the first time that Maria and I were on TV together in like since 10 plus years. So it was really cool. And look, so the economy, the Fed, what's going on as inflation, we reached peak inflation, all these things that people are trying to look at. That's what all of this was about. And here's the short version, and then we can take this anywhere you want to go. But we have not reached peak inflation. This Fed is feckless. I coined that term on Maria's show that morning, this feckless Fed. They were like 6 months. Can we curse on this show? By the way, 6 effing months behind the curve in doing something about inflation, notwithstanding indicator after indicator after indicator that we were in an inflationary environment. And here's what I'm going to leave this opening statement with, Alex. And I said we could take this anywhere you want to go with it. But markets, particularly markets as efficient as they are today, markets will do what the Fed is either unable or unwilling to do. And you've already started to see that in how treasuries have been behaving lately and how equity markets have been behaving lately. And so I don't think we're going into recession. I was asked that already twice today on 2 other media spots. I'm not using the R word, but we are definitely in for some additional and sustained volatility through the rest of the year. And I'm really going to be looking to see how those Q3 earnings numbers come in, because we're not going to really see the true impact of this inflationary environment, changes in consumer discretionary spending, blah, 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 until then. So that's the opener.
Well, and you're spot on with all of that stuff. And the earnings reports that came out, most recently were horrible. And I think that creates a lot of fear in the marketplace, which in turn, to your point, drives down, consumer confidence and discretionary spending. With that being said, and people tightening up their wallets, really, what is left for us to do? The Fed has printed a ton of money last year. And listen, whether for right or wrong, decisions were made to prop up the economy. It did take us through 2021. But we also have raised interest rates now 0.75 of a point, 50 basis points on the last call and 25 at the beginning of the year. And that really was what was alluded to going to be the max rate hike for the entire year. So it kind of gotten baked into the market, but now we've used it all up of what we said we were going to do. And it's not even the halfway point. Do they have any more tools left in their tool belt to curb what's happening, or are we on a roller coaster ride on our own?
No tools, right? So and you saw we got the FOMC minutes that were released yesterday. Of course, they were from the meetings a couple of weeks ago. Very sort of dovish, certainly in a if I'm looking at the dove hawk, which I also want to do a meter like the fear and greed meter that we use for crypto. And I want to come back to some of the stuff that you pointed out, Nick, about the starting of the dislocation of the correlation in the SPY, which I think is a good thing, and so some of there's maturation happening in the market. As Alex knows, I run a crypto hedge fund out of my asset management firm in Puerto Rico. John runs one as well. I've been investing in crypto since 2014, so it's a space we love as much as we love the equity markets. But to answer your question, Alex, no, the Fed has no more arrows in the quiver, particularly when the market's been behaving the way it's been behaving, right? All indications are you are not going to go to a 75 basis point hike, even though a lot of analysts at a lot of big name firms, and I won't call them out, all said, well, no, the next meeting is going to be 75. Then the market shit the bed as it has, and although it's like Groundhog's Day, we're either in a big sell-off or in a bear rally, or a big sell-off or a bear rally. It's almost becoming a predictable pattern, dare I say. But no, there's nothing left for the Fed to do. And what the smart money is looking at, what institutional investors are watching, what we're watching is, are they going to do something stupid and screw things up further? And the hope is that the Fed just kind of steps back a little bit. We'll see another 50 basis point hike at the next meeting. Then we've got the summer break. We'll see how things look, in terms of the next meeting, hoping that volatility will smooth a little bit in the summer when a lot of traders are, in the Hamptons and Myrtle Beach or wherever the hell they go, or Puerto Rico, where we'll be certainly for some part of it. But no, the market's got to do the work at this point. The Fed's out of arrows in the quiver.
Are you a fan of his J Powell? Are you a fan of Jerome Powell leading this charge or no?
I'm sort of neutral on him. I think a lot, unfortunately, of what the high level decision making that's being made, things that influence his decision making, comes from his boss up above, who unfortunately is the most clueless. And so I'm kind of neutral on him. I think that this experience is not going to be well portrayed from a historical perspective. I think market historians will look back on this Fed and kind of go, this was not exactly the A team that we needed. Now, look, in fairness, this Fed has had an unbelievable cornucopia of shit to deal with, right? I mean, from COVID to war to unprecedented supply chain issues to, it's like, are we waiting for like the fifth, plague? Is it like toads falling from the sky? What's next to happen? I'll tell you what it is, by the way, if you're curious, it's weather. This summer is setting up from everything. We have an energy trading desk at the firm in Puerto Rico. And I got a weather briefing from our chief energy trader. And it's going to be hot is the very short version. You've already got unprecedented heat waves in places like India, which is causing further food supply.
110 degrees in India.
110 degrees. Yep. And you've got the expectation that we're going to see rolling blackouts here in the United States in some cities. That's going to impact agricultural output, going to further impact food supply. That's one of the biggest macro things that I am concerned about, both as a citizen but as an investor, is we are looking at a pretty bad global food crisis, and I don't see that getting better.
Yeah, I completely agree. To Mark's point, Nick, about traders going to the Hamptons, which happens every year. There is Hamptonites exodus every August, particularly, and every February as well. And those seem to be the low volume months for the market. Since we are correlated with the SPY in such a big way, and one of the things that we have had problems with in the crypto market this year is low volumes. Do we see this getting worse with summertime coming?
So my initial answer, based on the fact that we're now, and I don't want to say this too harshly, but we are coming out of COVID, at least in terms of how Americans are living their lives. We're still dealing with it, but our freedoms and the idea of interacting with each other and being social is much more open than it was, I'd say in 2020 or 2021. It is more likely that we will see large volume drop-offs. And I think just like on the weekends, when we typically see low volume, it's easier to push price around. There's less players. The players who are playing may be nascent, not playing with a lot of money. It is very much a market maker controlled zone. I mean, it really always is, but it's much more risky at that moment because market psychology becomes much more important when there's not as much money splashing around, i.e. it's easier to move prices. So I would agree with you, but the only thing that's holding me back from 100% agreeing with you is the fact that you can attack the name X something summer has been prevalent for the past 2 crypto cycles. DeFi summer, Solana summer.
But
NFT
this isn't hot girl summer again this year.
It's going to be hot guy summer this year.
There you go. It's good for hot guys like us. Or did I get that
Exactly.
meaning totally wrong?
Take the glasses off and throw the swimsuit on, and we're rolling in it. So
I got a face for radio. Listen, Nick, what's it gonna take to take this 1.24 trillion market cap, which is now almost a third of what it was before, back up to that $3 trillion range?
So it's interesting enough. I mean, to put it bluntly, it will decrease continually, likely throughout the summer and at least into Q3, into Q4, I should say, because we're just entering Q3. So I do believe that Q4, we will likely have some sort of rise. We typically see a little bit of euphoria and excitement around the holiday season, or going into the holidays, I should say. But I do expect that to probably drop down to, just over 1 trillion. Or around there, something like that. But I think what's going to push us in that direction, we're already seeing the news. And this is a delayed effect. But VC funding disappeared. It was gone 2-3 months ago. Andreessen just recently raised multiple billion-dollar crypto funds. Now, Andreessen typically leads the charge in very innovative tech and especially new markets as well. They've been heavily crypto-focused. The fact that they're raising $4.5 billion, it's tough to believe that we won't see another bull market in cryptos or in the cryptocurrency market in the future, just given knowing how they deploy that money and how we've seen the VC landscape. That will change, but there is reason to believe massive amounts of liquidity are ready to enter the industry intelligently. And we do know the best companies are born during a bear market, and they love and they have the most success, and investors love them in a bull market. So I do believe that will come, but the catalyst that's going to happen is I think, 2-pronged. ETH, we just saw a hiccup on ETH 2.0 dragged crypto. If ETH 2.0 merge goes successfully, big catalyst for crypto. I think a lot more players will start to enter the space and experiment on Ethereum from a future state perspective rather than how people are currently interacting with it. 2 is regulation. Do we get clarity on what the hell you can and can't do in relation to the cryptocurrency market? Do we say that we firmly want American innovation to happen in this market, or are we going to continue to be haphazard running around Korea, Singapore, Malta, and all of these no-name countries where you have to basically pull an arm and a leg just to get money transfers through? So I think the idea of when is our next bull market going to happen, in correlation with what Mark said, I mean, we need to obviously come off peak inflation. The Fed needs to stop with this dovish, hawkish battle back and forth. We need legitimate clarity in terms of what is going to happen in the market. That's step one. Two, if we can get some solidity in terms of how crypto infrastructure is evolving, that's extremely helpful and will give new entrants and current entrants more conviction in terms of buying assets and trading them. And then third is regulation. As soon as the big wigs understand how they can place money, what they can and can't do, not get sued and have the best lawyers to do it, you will see massive amounts of money come into the space, as we've seen with every other American innovation that can breed both yield, be outsourced and also create money onshore. So I think those are kind of the three big ones, but it's certainly going to be a domino effect, and maybe two or three can be inverse. We definitely need clarity. We definitely need better infrastructure, and we definitely need better regulation or regulatory clarity, I should say. But in what order those come in, I think it's probably going to take two out of the three to really allow us to form a bottom where we can start to say, hey, now is a good time to start dipping your toes back in. People have been saying that here, but given the macro environment, what Mark just said, the fact that Q3 should still be more or less bearish, I'm not buying right now. I'm waiting for a little bit more of signal.
No, and we already see, listen, inflation is here in a big way. I think on the island here, gasoline is up 35% per liter. I think a head of cauliflower was just purchased in my household at a grocery store for $7. This is ridiculous. So I know Mark's bar is looking a little thin on inventory behind him.
It is.
We all gotta, yeah. We're in for some difficult times for a little bit, so we just got to adapt. That being said, we're reaching that time. I can't keep Mr. Lopresti from his other commitments of the day. Mark, thank you so much for taking the time out to join us. Always appreciate it, my friend. The last thing, I guess, don't forget, we're the official crypto partners of the Texas Rangers. Head on over and watch their game. I think they played the Angels last night, and they're seated third in their division. And, of course, Brandon Brown, number 68, Trade the Chain race car, racing in Charlotte this weekend.
I got a shameless plug, too, Alex. Do we have time?
Go for it.
Yeah, so as you know, and as some of our viewers may know, I co-founded a company called BattleFin, which was really, really early in the alternative data space, coming up actually on our 10-year anniversary. We have an events business. As part of that, we do 4 events a year: Miami, New York, London, and Asia, either Singapore or Hong Kong. And coming up June 15th and 16th on the USS Intrepid, we will be hosting our latest BattleFin Digital Asset and BattleFin Discovery Day, featuring top keynote speakers like Alex Masioli from Trade the Chain, where Alex is going to be telling our guests about how to use alternative data to be better crypto traders. So looking forward to that. If you're not already signed up to come, go to battlefin.com, buy tickets. We'll expect to see you there. Drinks are on Alex if you mention that you watched this episode of the Trade the Chain podcast.
And we'll put that in the description, folks, for everybody to be able to click over there and get tickets. I spoke at the one Miami. Listen, I'm a nobody, but Mark pulls in the players. I mean, Mr. Wonderful from Shark Tank. There's a bunch of people that go, and it's really interesting to hear the smart mouths in the room, so to speak. So, Mark, you can shamelessly plug BattleFin any day of the week on here. Thank you. Folks, everybody, hang on to your handlebars. We're not out of the woods. We're not even in the middle of the woods yet. So just keep your head down. Let's keep plugging forward. We'll try to give you as much real information as possible. No hopium here. And we'll talk to you next time. Have a great holiday weekend if you celebrate Memorial Day. Have a good one, guys.